Good morning, traders. Welcome back to Granby today. I wanted to share something interesting with you. I was taking a walk yesterday, kind of around here. It's a beautiful area, and I had a couple of ideas. Really good video idea, I think. Really good things that I think can help you move forward quite a lot. And what I want to share today for this video is about the principle of cutting your losses short. I'm pretty sure you heard that advice somewhere, either on a podcast, on YouTube, from different traders. They say you need to cut your losses short. But how do you do this exactly? First of all, I want to go through what not to do, what not to think about, and then I'll share with you 3 ways of doing that I've used myself in the past, and they work. So let's get to that right away. Now here's what not to do about cutting your losses short. You don't want to do it ever based on feelings. Quite simply, if you decide that you're going to exit your trade because you feel like you should exit now, it's the right time to close the trade and leave, that's usually a bad idea. Most of the time, it could be a good thing for you, based on how you've tested that and seen results for this. But in most cases, I don't recommend you do it. I recommend you have a sensible approach, which will work in the 3 ways we'll talk about in a couple of minutes. When people say cut your losses short, it's very easy to take this at an extreme level, where you say, oh, all my losses, I need to cut them really fast. Now, there's a certain point, kind of a certain barrier not to go past, and you want to be careful with this, but also don't keep them too long. Like, it doesn't mean that because you have a trade going into a loss, you have to cut it. But it doesn't mean that because you have a trade going to your stop loss, you have to cut it before the stop loss. That's for sure. So I recommend, first of all, you always put a stop loss on your trades. That's kind of basic, given, simple. Don't think about it now. Just put a stop loss always. But then how can you make this better? So let's say you trade, you find out you have a stop loss, and even though you have the stop loss and the take profit, your strategy ends up being a losing strategy. So there's 3 things you can do with that. The first one, something I used to do a few months ago. We call this moving your stop loss to break even. So I would get in the trade, price would move in my favor, and then I would exit part of the trade. I would move my stop loss back to the entry. So that makes it ensure that if price is going to pull back in the opposite direction, at least you're covered and you won't lose your whole position. So it's kind of cutting your losses short. A different version of this could be that when price moves in your favor, as soon as price makes a new low, you move your stop loss beyond that low. And that's a good way to do it. Now this is going to make your losses shorter and shorter over time, but keep in mind that your profit might also be a little bit smaller, so not the best version for everything. But it could really work well if you decide to use it. This is a super rainy, not cool day, which brings us to point number 2, second way to cut your losses short. And this one, I kind of like it. I didn't experiment enough with it, I feel. And I'll show you some examples anyway. This one has to do with having a time stop. Now, what do you mean by time stop? 2 things. I can only speak here with my personal experience, my personal strategy that I trade. I've seen that whenever I enter a trade, if the first candlestick is bearish and it's a buy trade, so kind of the opposite, it tends to not go that well. It tends to not be super good. So that could be a rule you add. So if the first candlestick of your trade is bearish or in the opposite direction, then close the trade. Okay, and then you cut your losses way shorter than if you wait for the full stop loss to get reached. So that's the way. I didn't test this out completely, fully well so far, but from my experience and my kind of thoughts, it could be a good thing to explore in the coming months, for sure, for myself. It could be different for you, so just be careful. And the second way of doing that is I've seen from my statistics of my trades that the trades that last longer are usually losers. The trades that are winners, they tend to happen really fast. So what do you do with this? Well, the very simple answer is you look at how long your trades last on average and what's kind of the threshold where you can say, well, past this, it's likely to be a losing trade. And then you would exit all your trade at this point. So you know if they're after that, they last longer than this, they're not closed at this point, chances are that the trade will be losers anyway. You might want to close it earlier. Now, the point with this is that you need to have a lot of stats. You need to understand the numbers. And you really need to compute all these things, right? This is not just, oh, I feel like exit there. No, it's like the stats tell me this. I'll do this and I'll make this happen. Now, these 2 tips work well in most circumstances. They kind of are very useful. But there's maybe one more thing I would add to cut your losses short. I would prefer to call this maybe an event stop. So for a long time, I've been looking in the market at what price did and what my trade results were when there was a news announcement or speech. And I found out the speech were pretty unreliable at some point. So I'll get in the trade will be perfectly well, like nice setup, perfect on the chart. But then in the speech, there's a spike and I get stopped out. And right after the speech, it comes back really well, perfectly fine. So my rule at this time was whenever there's a speech coming up, the hour before, I'll close the trade. Okay, whatever that trade is. That could be the 1 hour chart, the 4 hour chart, or whatever. And this really helps me kind of smooth out the equity curves. There was no kind of down because of the speech. And most of the time I would be losing anyway. So I kind of had this rule of close the trade before speech announcement. News releases, I didn't really care unless I was day trading. And then I would close like 10 minutes before. But whatever you decide, that could be a really good way to kind of smooth out the things and to cut your losses short before they happen. Like before the possibility of a loss in speech, close the trade and then you cut your losses short. Best case scenario, you even have a profit, which is kind of good. Like everyone likes a profit sometimes. So that's the way to do it. Now, I share with you today 3 ways of doing it. First of all, having break-even stop losses or stop your move over time. The second one is about having time stop. So whenever price does not do something for some time, exit the trade, close it early, cut your losses short. And the third one is about these event stop, which you can have before news announcement, a speech coming up, or whatever news you think might have an impact. Now you need to test all of those, see which one works better. You might apply multiple of those at the same time. But keep in mind, this is a game of testing, applying, re-evaluating what happens, and then tweaking things up if you need to. Hope that makes sense, guys. Comment below what you thought. As always, any way you have to cut your losses short, comment below. I want to know for sure. Subscribe if it's not done yet. There's one more video like this every single day. And also click the bell next to the subscribe button if you want to be notified. Like, you never ever want to miss all those videos. That would be not cool. And with that being said, I'll catch you guys back here tomorrow. Ciao.